video. As always, we're going to take a look at the four major U.S. indexes. We're going to take a look at some breadth readings as well as commodities. And we're also going to take a look at the short interest in on the Nasdaq and what that could mean for us moving forward. So let's jump right into it here. First and foremost, we have a chart of the S&P 500 up on the screen for you guys. S&P 500 had that nice rally, and if we look, we failed right up into this resistance zone and subsequently have turned back down here over the last couple of sessions. But if you look at where we're sitting at right now, we are right at that support zone. So what bulls really want to see is this hold, and this support zone comes all the way back from those February highs and make the subsequent turn back up for that run at that all-time high. If we break back below that 3,400 level, I would expect us to head back towards that 3,200 level. So those are the levels that we're paying attention to here on the S&P 500. We jump in and take a look at the Nasdaq. Very similar type of chart. Obviously, the leading index for us this year, but we ran right up into that previous resistance from the high a month or so back, and subsequently have fallen back down, but are still holding over that key 11,500 zone. So this is where we want to see the bulls hold for that next kind of push higher. A failure here would target that 10,750 zone. We come in and we take a look at the Dow. The Dow, once again, right in here as well, has come in and failed right up at those highs from a couple of weeks back. Subsequently has turned back down, and it has fallen back below the key level that we had from that gap down all the way back in February, right around that 28,500 zone. So a little bit weaker, still kind of holding this little uptrend line right here, but we really want to see this zone hold. If not, we would be looking for a move back into that 26,000 area. And the Russell, which has been the lagger for quite some time, started to push back up into that key zone from the beginning of the year, which it's had a very difficult time getting back into. And if you look, we've talked about it a lot, the 50s are what are important. The Russell failed right at that 1650 zone and has fallen back down to that 1600 support area. If that fails, I would expect us to take that move back towards that 1450 to 1500 support zone. Still no new highs on the year, or no new highs for the Russell since going back 2 years. So continues to be the lagger. We've talked about that a ton. Now, let's take a look at the emerging markets here. The emerging markets have come up and they failed right where we didn't want to see them, right basically at that high from earlier this year. You can see that's where we've kind of turned back. But like all the other indexes, we have not broken back below that support zone. So this literally could just be kind of that back test before we head higher. A failure here would target that gap zone back down at about that 1040 zone. So we're paying very close attention. And of course, when we talk about the emerging markets, we want to take a look in at the U.S. dollar. The U.S. dollar has acted interesting here over the last couple of months. We had that potential bottom put in with that breakout that failed right at that resistance point, subsequently turned back down and got back below the breakout spot. And then sure enough, here today, we have pushed back up above that zone. So there is a big battle that's going on here right between that 92 and that 95 zone in on the U.S. dollar. And ultimately, who wins this is going to have a big impact moving forward. So we're going to continue to pay very, very close attention to what goes on over here, as it's going to have a big impact on a lot of things moving forward. Come in and take a look at commodities. Oil popped back up once again right into that 41.50 zone, and once again unable to get above it. So that is where we're starting to turn back down from today. We're down about 3.5% on oil. This is quite the battleground that's happening here as well. We've got between 35 and that 41.50. We do have a little bit of higher lows that are getting put in. Whoever wins this battle is going to be really important for the price of oil moving forward. A failure up here targets that 35. Below that, we go back down into the 20s, and above this, we have the potential to run back up into that 50 zone. So really important what happens over here. Again, this is kind of just a month or so of trading sideways in the space, and we're continuing to pay close attention. When we take a look in at gold, gold here has continued to kind of just trade sideways to slightly down over the last couple of months after that big pop higher, right? This can still be looked at as a potential bull flag. It's holding over that key 1800 level that we talked about multiple times on a monthly basis, and it is right about that 1900 psychological round level at the moment. Still, not a whole lot has been accomplished in either direction here over the last couple of months after this big thrust higher. Just kind of slowly worked that off. We're looking for that next move. A move back under 1825 would be really bad for the gold bulls, and a move above kind of that 1950 zone right in here would give us that potential for that run back up towards that 2089 level. So we're continuing to pay very close attention in there as well. Last, I want to check in commodity-wise with copper. Copper, we talked about that $3 level being so key, and we are back up over that $3 zone. So big battle happening right at that $3 level. That next move really comes into about 330. And if we are unable to kind of clear that high from a couple of weeks back and start to turn back lower again, we'd be looking for a move back to about that 290 zone there in on copper. Next, we want to come in and take a look at that Nasdaq McClellan Summation Index. We talked about watching that kind of bottom at about that negative 300 zone. It subsequently has and rallied up here over the last few sessions. Even though the Nasdaq itself has pulled back over the last couple of days, we have not had a crossover there. The breadth reading is back above zero, so that is a good sign here for the bulls. Again, we're still kind of trapped if we really look at this with the one outlier there in March. We've really been kind of trapped in the same range for much of the last year or so. With the breadth readings. Now, one of the next things I wanted to take a look at for us is the Nasdaq Composite Index and the amount of short sales in the index. And what we have here is a chart going all the way back to 1998. You can see that we have been increasing that short interest here as of late. We're still not to the level that we were back in 2007 and 2008, but this has been something that has been creeping up a lot recently, and so we wanted to take a look at the data set and see what an increased volume in short positions in the Nasdaq could mean for us moving forward off of historical data points. So the data set we're looking at here is the Nasdaq Composite Index. We are taking a look at it when it's within 10% of highs and short interest hits a 3-year high, which is what just occurred. And we can actually see that the data set itself, everything that we look at is actually above a 50% positive rate moving forward over the next year with a really good bullish slant 2 weeks out. Part of this can certainly be that when the market is up near those highs, people start shorting thinking things are overvalued. They're not. They get squeezed, and that kind of adds fuel to the fire, which helps drive prices higher. That's what this data set could certainly take a look at. Even a month and 2 months later, we still had a 63% plus positive rate, and then you go all the way out to a year later, it was higher 86% of the time. So it's actually not a negative, as I've been seeing a lot of people talk about, and that's why I wanted to share this with you guys in today's video to give you a good understanding of that data set historically. As I've kind of been saying here over the last couple of weeks, I think the market's really kind of waiting to see how everything plays out here for the U.S. elections in November. And we are still kind of trapped in between that 3,600 and 3,200 zone. So we're just kind of trading in this area. We could continue to see that sideways chop really until after the election. However, if the market does break out to new all-time highs, we certainly would be interested in taking that in on the long side. And if it breaks down, we certainly would be interested in taking it in on the short side. Although we continue to think that it's going to continue to stay in that kind of sideways range until the market ultimately makes the determination who's going to be our next president. As always, guys, if you would like to take a minute and chat with me about the markets, anything market related, feel free to drop me an email at mtedeschi@perspectivewealthplanning.com or give me a call at 814-580-9881. Would love to talk to you guys. As always, have yourself a good week. We'll see you guys next week. Take care.